Hello everyone, my name is Madi Daleiden and I am a junior and student analyst in the Applied Investment Management program at Marquette University. Today I will be presenting Mohawk Group Holdings, Inc., ticker MWK, which is trading at $34.70 as of market close on March 23, 2021, and has an estimated price target of $42.02. To begin, Mohawk Group Holdings was founded in 2014 and recently went public in June 2019. It is currently headquartered in New York City, New York. Mohawk is a digitally native, tech-enabled consumer product goods designer and manufacturer. The firm sits at the intersection of CPG, technology, and e-commerce as it leverages its proprietary AI-based platform, the AI Mohawk e-commerce engine, nicknamed Amy, to exploit product gaps in the direct-to-consumer marketplaces like Amazon, Walmart, and Shopify. Its current product portfolio boasts over 3,000 SKUs across 12 brands. The firm embraces evergreen products within the following verticals: home and kitchen appliances, health and wellness, electronics, and beauty. Mohawk was founded with the goal of becoming the CPG company of tomorrow. The metrics included below evidence how Mohawk has grown and evolved over the past 5 years. Please review them at your leisure. Because of its product development, improving profitability, and margin expansion, it is recommended that Mohawk Group Holdings, Inc. be added to the AIM Small Cap Fund with a price target of $42.02, representing an upside of 21.09%. On to my drivers, beginning with the new girl on the block. Mohawk's Amy technology defines its success and competitive advantage in the CPG space by linking all aspects of the product lifecycle. Amy drives new product development, automates sales and marketing analytics, and ensures efficiencies across the supply chain. Amy identifies target segments through natural language processing techniques like data scraping and analysis of online reviews, social media, blogs, and store-to-store pricing reports. Some of Amy's direct results are included in the statistics below. Most importantly, there is an opportunity to monetize Amy as a PaaS, platform as a service. Business Wire reports that the e-commerce analytics software market is expected to grow at a 6.11% CAGR and reach $22.4 billion by 2025. Management's past experience and Amy's unique platform offerings positions Mohawk well for capturing this market. Next, Mohawk's product launches and M&A pipeline demonstrate strong opportunities for organic and inorganic top-line growth. Mohawk launched 37 organic products in fiscal year 20, with 120 more expected in 21. Mohawk also acquired many Amazon-based brands in fiscal year 19 and 20, including Chureo, PureStream, Miller, Healing Solutions LLC, and Paul Schmidt, just to name a few, which added thousands of products. Mohawk management purchased these brands at all relatively low multiples, approximately 3 to 5 times trailing 12 months EBITDA. Furthermore, Mohawk's recently announced acquisition of Photo Paper Direct, a UK office supplies seller, is expected to increase EBITDA by $10 million. Mohawk's proposed M&A pipeline totals a trailing 12 months revenue of $522 million and a trailing 12 months EBITDA of $97 million. Management's commitment to building out the product pipeline, both organically and inorganically, will continue to drive Mohawk's top-line growth. Finally, the e-commerce evolution driver demonstrates how consumers' online shopping preferences and habits are changing, as they are becoming more dependent on Amazon, less fixated on brands, and empowered by the reviews, which caters directly to Mohawk's business model and strengths. The statistics included below evidence these shifts and how Mohawk is positioned well to accommodate them. Being a product-agnostic and consumer-centric CPG company allows Mohawk to defy brand limitations to capitalize on consumers' shifting preferences and shopping habits. To reach the intrinsic value for Mohawk, a 5-year DCF model was created. Using a WACC of 6.49%, a terminal growth rate of 2.5%, and a calculated beta of 1.54, an intrinsic value of $43.26 was reached. A $1.25 IP premium was added to this DCF output after conducting a with and without analysis using Amy's product launch success rate as a driver for this IP premium. Assuming their historical performance of an 80% success rate as a base case in the DCF, the model was run again with lower revenues, assuming only 40% of organic products were successful. The present value of the output resulted in this $1.25 incremental difference. Additionally, an EV to EBITDA multiple valuation was calculated using a weighted average peer multiple of 18.09, resulting in a relative value of $38.99. Finally, a price-to-sales multiple valuation was calculated using a weighted average peer multiple of 1.56, resulting in a relative value of $30.58. By weighing these models, 70, 20, 10, a price target of $42.02 was reached, representing a 21.09% upside. Mohawk does not currently pay a dividend. Now a few risks. First, Mohawk is heavily dependent on Amazon as 88% of its fiscal year 20 revenues were sourced from the platform. Changes in Amazon's third-party seller fees or increases in the market share of Amazon's private label brands may threaten the viability of the Mohawk business model. Additionally, when developing a new product in its launch phase, Mohawk allows its contribution margin to drop to negative 35%. If future product launches are later deemed unsuccessful, operating losses and unprofitability may persist. Finally, Mohawk has been taking on substantial amounts of debt to fund expansion. Mohawk's potential inability to meet these commitments limits the firm's financial flexibility going forward. Finally, a brief overview of management. Yaniv Sarig is the co-founder, CEO, and president of Mohawk. Management's previous roles range from software engineering at Bloomberg, supply chain optimization across major CPG companies, and marketing analytics at IBM, all relative experiences contributing to Mohawk's success. Nearly 13% of all shares outstanding are owned by management and the board, 33% of its board of directors are female, and management's average age is 43 years old. In conclusion, as Mohawk continues to leverage its AMI platform, build out its product pipeline, and capitalize on the evolving e-commerce trends, I recommend that the AIM Small Cap Fund purchase Mohawk Group Holdings, Inc. with a price target of $42.02, representing an upside of 21.09%. Thank you all for your time, and I look forward to answering your questions via the D2L discussion posts and during the live Q&A session this Friday.